Hi traders, I'm going to show you an example of a bullish gartley pattern that's set up on the pound US dollar on a 5-minute chart. We're currently looking at the pound dollar 4-hour chart, and once again we want to identify our key areas of higher time frame support or resistance. So if we take our Fibonacci tool, we draw it from the very low up to the very high. You see our price came down, hit that 50 area. Okay, we've had a couple of trades already around this area. We've got this key level. Okay, nice horizontal support resistance. Price is really rejected nicely off here. We've had a nice rally back up. You see this area of resistance here into resistance, and then a rejection down back into this key level. Okay, so we know that this area here is held very nicely in the past. Okay, comes back again, testing resistance. So we want to look for a possible pattern to set up in and around this level. You have a look at the actual candles. Okay, sort of bullish buying pressure coming in here. Nothing too exciting at the moment, but you can see previously we've had a few areas here picking up some orders here. So once again, let's have a look at this level on a smaller time frame. And this particular pattern set up on a 5-minute chart. So we had price come down. Okay, let me just compress this right down. See how price is making lower highs, lower lows. A nice down trend on the short term. Okay, hit that key area on the higher time frame, that key area of support. Then we rallied, and you can see this little bit of a rally here. It's made higher highs, higher lows. Okay, hasn't quite taken out. If we just zoom this up. Hasn't quite taken out these highs here. So this area, you see this area here, this is definitely something you want to pay attention to. It's come up, tapped this area, taken a few orders in, now started to retrace. If we just zoom this up here. So this is the pattern that actually set up. We had price rally, and then it started to retrace. So when it does that, you want to have a look at your fibs. So from the low up to the high, see how price retraces, 38, 50, 62. The 62 level gets capped, and then price starts to retrace on this. So once you start getting a retracement, I'm going to have a look at your Fibonacci swing from the high down to the low. So you can see that we have a possible gartley setup. You see the 79 with the 127 projection or extension. If we label this, just adjust this slightly. We label this would be X, this would be A, this would be B, C, and D would be the completion point. And this is the area right here that you look to place a buy limit order. So 58.24 is the level that you would want to be interested in putting your order at, and then a stop loss just below these lows. Okay, so if you go over to the order platform, new pending order, we'll put a buy limit in 58. Now we want to put 1 pip above, so it'll be 25. Okay, it's a small pattern, 5-minute, 25 plus the spread, so we're looking at 28. Okay, a 3 pip spread. So you can see what a difference that makes in terms of 1 pip above plus the spread. Okay, you can get a platform or broker with a real tight spread on these pairs. Okay, it's really going to be an advantage in terms of cost to your execution. With a stop loss just below this low, so I just want to see where we on a 10 pip quickly. So 10 pip, so we want it below that. So if we drop it down, so that's 11, 12, let's go 13 pips. Okay, 13 pips of risk. The take profit I'm going to leave open for now. I really want to see what happens once price, or if price gets down there. Okay, so 13 pip risk, and let's just see what happens in terms of, actually just have a quick look at the hourly chart. In terms of possible targets, you can see, if we zoom this up, this, you see this little block right here, this last bullish candle before price dropped down. Price has already rallied up and tagged that level already, so we filled the orders in there. So I wouldn't be that interested in taking profits here. I would look further up. You see this open space here. Okay, the next sort of major area on here to me would be around this level here. Okay, you see how we have a level of resistance, support, and the last sort of block, okay, is here and then here. Now we've also got some areas, you see this level in here, okay, nice price flip in there, but it's a bit open in terms of space. So I'm going to look at, in terms of targets, probably around this area here. And if we just draw a fib tool from this swing down, so there's a 38, maybe we want to take some profits off there, and then you see that 62 area just below that. Definitely want to be looking there. Okay, so let's wait and see. As I said, I don't like to put a target in. I want to see how price starts moving if we get filled. So we'll just step this forward. Okay, so there's a spike down. Okay, limit order has been filled. Okay, the stop loss below that low. If price runs that low, I don't want to be in the trade in terms of this pattern. Okay, so now we need to watch this. Now you can do this differently. You see this area here, you can really micromanage these trades if you want to. I personally don't like to do that. I like to give them a bit of breathing space, because these are higher time frame key areas. Okay, the flows are more likely to come in around these levels than not, and what you'll find that happens more often than not is you get in a trade like this, okay, you get scared on the trade and price sort of just comes down a little bit lower, or it rallies and then it pulls back. Okay, that's shaking out the weak positions, the weak longs. Okay, so the institutional flows will take those orders, and that's why you really have to, if you want to get those big runners, or those decent runners off these key higher time frame levels, you really need to just be patient. Okay, give price a bit of room and space to move. So you see how this bullish candle, nice buying pressure come off this area, come back, retest this level now as support. That's what you want to see, and price is now starting to release. Just have a look. I'm actually just going to get rid of these fibs on here so we can see what's happening on the other time frame. So this is a good sign. If we just have a look at the hourly chart, see how price has rallied. Okay, come back, picked up more orders here. Nice bullish looking candle. You see the rejection in terms of the wicks here, closed above. You see this area here. Okay, that's a nice sign, but obviously we want to see price now rally and close above this area here and this level here. This is sort of the major area that I'd be watching. Okay, here and here. So if we just follow this along a bit further, here's a 15-minute chart. Just comes back, testing this base. See, your price comes right back down now. Okay, just have a look at the 5-minute chart. This is why I say I don't like to, you see we're up like 18 pips and price is pulling back now. I personally don't like to get my stop to break even and start reducing risk until we start clearing some decent highs. Okay, now obviously you stand the risk of price obviously running down, you're up 15 pips or 1-to-1 on the trade, and price then pulls back and it stops you out. Okay, I accept that risk. Okay, that's me personally, and everyone's going to do it a little bit differently. But if you want to catch those big runners off these key levels like this, which is quite possible, and where you can really ramp up your risk reward, you've got to just be patient, give these things a bit of space. Okay, so your price rallies, comes back, drops again. Now we start to release. Watch this high. So now price comes up. You see it's tapping this order block again. We want to really see a bit of a release now, and see this area here. Okay, resistance, support, resistance, holding a support. Let's have a look at that 15-minute chart. So you see the level comes back, retest it now. Okay, so we really want to see price now clear this level and hold above. So you see, if we just zoom this up, see how price closes above that level, comes back, retests this candle here, this block right here, retest that. Now we've cleared these orders here, so these stops are taken out. Your buy stops get taken in around this level, so your order flow stacked up above this area. Stops, people in this range, stops get triggered. Breakout traders, buy stops, come in here. Now we start getting a nice push up. So what I want to do now, we've cleared these highs. I'll get my stop to break even. You can also, as I said, you can move or take partial profits if you want. I haven't quite hit a level that I'm quite interested in terms of taking profits just yet, but this area here, this 58.80 with the 38, I think I want to maybe take partials, take half off there. Just move to the 5-minute chart. Okay, now this platform I don't think allows me to actually take partials on a limit, so I need to just watch price to see what happens. So I'll just step it forward here. Okay, so you see our price spikes up into that level. Okay, bullish. There's no offers coming in at that area. We're currently up 55 pips. What I want to do is I want to close part of the position at that area. Okay, and in terms of moving the stop, I don't really have at this moment in time. We've got, I'm just watching in terms of, where do you want to place your stop loss? If you're going to bring it up, where do you want to place it? Okay, you want to have some place that price is going to be protected in terms of, barriers. So you've got this area here, here, and here. So we could put a stop loss just above here. So I like this 58.37. You see the spike low here, 58.37. I'm going to move 58.37. I'm not going to move the stop for just the sake of moving it. Okay, that's not clever trading at all. So this area here, we're moving through this area here. This level up here, definitely want to be taking profits. Okay, you see this hourly area up here, 59.17 is the target. Definitely want to eye out that area. So I'm going to modify this. My take profit I want right just before this block here, this big bullish candle here and this bearish candle. That's we've got some order flow in there. So 59. I'm going to go at 15. So just below that level. Actually, let's go see this wick low here. Okay, I want to go just below that area, so even 13. So modify that. I'm going to step this forward now on hourly chart, see what happens. Okay, in terms of actually reducing or locking in profits, if we have a look at this chart, there's really not, we're not getting those clear swings. Prices really just started to rally here. So if you just moved your stop up here under these levels, you've got a good chance of prices breaking down, coming right back and testing some sort of area, and then having another go. We don't have clear swings in terms of, you see how we've got this kind of these cycles. We don't have that. Okay, we've got this level here, and this swing low is kind of the most important area for me. You could look at this minor area here or here, but it's just not that interesting. Just step this forward a little bit, and you see this area. Got these little blocks here. You could also micromanage it. Just your stop below that. Okay, that's also a choice. Just step this forward here and see how price closes below, comes back, tests resistance. So price is starting to retrace a little bit here. Okay, so there's the actual release now to the upside. That target's been hit. Had the target not been hit, after price starts releasing like this, you could start moving a stop below this major swing. Okay, you see how this major swing looks far more interesting in terms of putting your stop loss under that and locking something in than these minor sort of levels here. Okay, see how price comes back, test this little block on the left here, and then we get that rally, and see it just continues up from there. So if we have a look at the account history, we had a trade for 85 pips, okay, for initial risk of 13. So we got just over 6.5 R on the trade, okay. So risk reward was 13 versus 85, so 6.5 odd. So nice little trade. That was a bullish gartley set up on the 5-minute chart.